Hey guys, it's Crystal Lee Lucia here, also known as your Home Sweet Home 519 Realtor, Crystal Lee Moore. This is Realtor Life, and I am so pumped. Today we have Adam Legg with Adam Legg Mortgages under Dominion Lending Centers here to chat with us about becoming a mortgage agent. Hi, Adam. Thank
Hey,
you.
Crystal. Yeah, thanks for having me on.
So happy to have you here. We're going to talk about becoming a mortgage agent, but also kind of what led to that and maybe some insights on the mortgage situation in our area. So, without further ado, welcome. Um, a couple questions, Adam. So, how long have you been a
Yes.
mortgage broker?
So 3 years now licensed. Yeah,
Amazing.
yeah.
Amazing. And what did you do? You have a pretty cool background before that.
Yeah. So before that, I'm actually a CPA, so a chartered professional accountant. So I tell people I've got kind of a career, about a 15-year career of corporate accounting and finance before behind me before getting into mortgages. So my last role, I was actually a VP of finance for an HVAC distributor headquartered here in London, Ontario,
Woo.
where I still live. Yeah. Ooh, ooh. Yeah, so that was definitely a different thing. And it really, I got into it. I was just having an urge to run my own business.
Yeah.
And my wife and I mean, we bought our first house going way back, over just about 20 years ago exactly. Bought our first house when I was 21, and we were married young and built equity over time and just continued to roll that to get to the position that we're in now, and always had an eye to, we did some live-in flips. We've always had an eye to investing as we've bought and sold houses. I think we're on our seventh that we're actually living in now. And so
Oh, amazing.
yeah, so I really am passionate about building wealth through real estate.
Yeah.
And making sure, especially these days, I love working with first-time home buyers and showing them how much wealth they can build.
Yeah.
But yeah, it was really through that process. And then we did an actual flip, like bought an investment property during COVID, which that one we purchased March 5th, 2020, right
Oh,
before COVID
oh
came to
no, like a week
Canada.
before.
Yeah. And so we firmed up on it March 5th, and it was set to close April 29th. And
Okay.
everything went well, but that was quite an experience. And we were a little worried there for the first month or two, and then
Yeah.
everything started picking up. But it was really not a good mortgage experience going through that property
That's what I,
specifically.
yeah, that's what I was going to ask you. So one of the things that I know you mentioned you wanted to be self-employed, but you have a pretty cool like your why for getting into this
Mm.
career. Because
Mm.
I think a lot of our listeners, we have realtors, we have entrepreneurs, we have people that are maybe thinking of going down that path. But yeah, what was it that actually inspired you?
Yeah, really, it was just not a good experience going through to get that mortgage in place. And at that point, again, my wife was self-employed, but consistent income, and I was had a salary and everything like that. So for mortgage qualification, fairly straightforward. But it just took forever. And I will have to say, it probably had a little bit to do with COVID.
Yeah.
Like the person I was dealing
No
with
one
at the
knew what was
bank.
happening. Yeah.
Yeah, it was just so unresponsive. Didn't know where we stand. Had to follow up with them just, a couple weeks before closing. Be like, do we have this? He said we were good. Do we have
Yeah.
this in place? Like, hadn't heard anything for a month, over a month, and so then I was like, well, how hard can this be? So I want to just get into this, find out. It turns out it's harder than you think.
I was
It's
gonna say, I'm like, I feel like whenever you ask that question, it's like you find out, oh, it's like with real estate. How hard could it be? You're like, oh, much harder than I thought.
Exactly. Much harder than I thought, but at the same time, there's really no reason it was this challenging, or it was really the lack of communication.
Communication, yeah, that's
Yeah.
actually the number one complaint for realtors, but also I think for mortgage brokers. When people complain about an experience, it's usually the communication. Like you can handle any challenge, but you have to
Mhm.
let people know what's going on.
Right. Exactly. And getting ahead of it really at the end of the day. So that's a big part of my business now is
Yeah.
communication. Like, for example, if I have a condition of financing offer, I will let the clients and the realtor who's working with them to buy, I'll give them an update every single day. Even if it's I've got no update. And usually I manage expectations. Some lenders take a few days to get back to you. I probably won't hear you in the first few days, but
Yeah.
I'll send you an email just letting you know, hey, you're still in the queue. just so that people have something. But it was through that experience and then, talking about what it's like getting into it. I actually have a good connection who's a good friend of mine now who got me into the business, who I met through real estate
Nice.
investing. And he's a broker in my company. And so just went through, looked into how much it was, like what it takes to get qualified as a mortgage agent. And really the course is it's around $400 and takes
Okay.
about 50 hours roughly.
Okay.
So a
And
little over
that's
a
helpful.
week.
Yeah.
Yeah.
That's but that it obviously it takes more. So once you get that, I'm sure like all like bright-eyed, bushy-tailed, you're like, now I'm a mortgage broker. Then what?
Yeah, yeah. So the course is really like the joke is how not to get sued in mortgages. Yeah, so they don't really get into it a whole lot. You learn, of course, the ratios and things like that the banks are looking
Yeah.
for, what fits in the typical boxes. But once you get into the real world, you realize not much is typical. So then it takes a lot more to figure out, different lender policies, how to structure things, how to put things together, how to build a story for the clients.
Yep.
And then in the building your business side of things, where are you going to get these clients? Who do you reach out to?
Yes.
And, those kind of things. Building relationships with referral partners and financial advisors and real estate agents in my case,
Yep.
to make sure that you have some people that you can help with their mortgages.
100%. So yeah, we actually just had an episode. The last episode was on partially on database management and like the number
Mhm.
one, you have to create that database. So depending on what your client is. So if your client for us, it's like buyers and sellers and lenders, right? Because we
Mhm.
want to keep in touch. But for you, that's I guess that's one question. Where would you say the majority of your business is coming from? So realtors and financial advisors?
Yeah, realtors, financial advisors, and then I'm fortunate I do have just from my past network. So I play soccer. I've got a lot of soccer buddies, and I've
Yeah.
had quite a
Okay.
few come through just relationships through that or friends of friends, that kind of thing. So it's amazing to have support from that
Yeah.
group
They should
and past coworkers actually, which that's another benefit having the financial background, being in a senior position in the company.
They
I've
know,
I kind of
they
had
know that
that.
you have the ethics. They know that you have the knowledge. Yeah, exactly.
Exactly. Yeah. So that was very helpful to start just staying in touch with those people. Yeah.
Fantastic. That's really good. And I think that's where, like, I know a lot of people worry as we get like further along this technology road. We were chatting about that right before we went live
Hmm.
on this recording. But I think like there was a big worry for realtors too. It's like, are people just going to start buying and getting mortgages online? And the thing is, most people want a person to help them, right? And that it's much
Absolutely.
easier to find a person who you know. Like those relationships are still so important.
Absolutely. Absolutely. And yeah, I've heard it too for both of our positions. And I feel like, for you as a real estate agent, people they want to talk to somebody about making the biggest financial move of their life,
It's a
right?
huge deal. Yeah.
Yeah, and same with on the mortgage side. So I do think we'll get to a point where there's going to be more done. Like AI will continue to kind of eat into our mortgage space. That's kind of what I foresee happening.
Yeah.
But it's going to be more of the straightforward things, and with people who are more DIY, people who are investing themselves with Wealthsimple and doing things like that
Yeah.
that'll be more inclined to taking on that big transaction themselves. But a lot of people that I talk to really like to have the help and guidance because there's just so much out there. Even when I'm talking to young first-time home buyers, like in their early
Yeah.
mid 20s, they come to me and they're like, you know what? I see I've been reading up on a lot of things on mortgage, but there's just so many things out there, so much conflicting information. I just want somebody who just knows and can
Yeah.
guide me through the process.
Well, I think so. There was a coach I had years ago in a coaching company, and it was like with our jobs, it's kind of like people are like, oh, I could just try doing it myself. But would you really, really fix your own car? Like if something
Right.
was really wrong, or would you go and like operate on yourself? Right. Like you want someone that actually knows what they're doing, unless you're changing careers. Like if you decide that, you know what, I'm going to be a mortgage broker. Okay, go be a mortgage broker, represent yourself. Cool. Right. I represent myself when I sell my home because I am a professional at what I do. But I
Definitely.
feel like too many people think it's like super easy.
Hmm.
And I actually don't think it's that hard to, it's not because I've the people that have done it themselves, it's not that hard to sell a house and it's not that hard to get a mortgage. Where you run into trouble is what happens next. So a lot of people when they're doing their house themselves, either it works, which is great, or I've
Mhm.
heard some horror stories where you get to closing day and then no one's qualified the buyer. They don't have any money. Like, oh, like I
Right.
thought I could get some money, but I can't. Sorry.
Right.
No. Ah.
Right.
Right,
Whoops.
or they're like, "Oh, I got this pre-approval, and now I can buy a house." You're like, "Oh, no, 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 that wasn't a pre-approval, and it's not really approved."
Exactly, exactly. That happens a lot of time. People go online and do that. I actually even have an app where people can go in, log in, create a profile, put in their information, and then put in what they're pre-qualified for. And I always, always go through when somebody's actually serious, I follow up with those people and go through the process of collecting the documentation for their income
Amazing.
because, you know, it's surprising, but like a lot of people when they tell you how much they make and then versus what they actually make, and sometimes it's yeah, it's different,
Yep.
you know, and not only that, it's not even necessarily what you make, but how it qualifies for a mortgage, just depending on how you're paid and things like that.
Oh,
There's
yeah.
different ways to structure it, right? And if you're
Yeah.
just plugging in the numbers, oh, my last T4 was X amount, and oh, I worked a ton of overtime last year. Well, then we might not be able to use that full income, right?
Yep. No, it's crazy. Like we had a client who we almost didn't get her house together because she got a promotion at work.
Hmm.
Great. But the
Right.
promotion was put for like like structured in such a way that it became a new position and
Okay.
like an on probation new position.
Okay.
And so, and we had to close her house in this time. And she's like,
Yeah.
we do. Like, so we worked it out, but it was just, there's little things that you really need a professional working on it because
Hmm.
otherwise you're just kind of like, imagine like you're just like the sellers wouldn't move the date. And it's like, well, are you losing this house because you got like, that's a terrible promotion gift.
Right? Yeah, I've actually worked with a lot of people who have just been like changing roles or going self-employed recently. But yeah, that one I like to hear because that one I'm like, I know I can figure that out for your client, right?
Yeah,
It's just knowing the right lenders, the right way to structure it, the right way to build that story
yeah,
to get that done. Because different lenders, I work with over 100 different lenders, so some will look at that differently and might be a hard no. Some I know I've got a little bit of wiggle room. It makes sense. She's got a promotion. Even if she's going back on probation, that'll be
exactly.
fine, right?
And I think the thing is like what's really important when you're choosing your lender, guys, like someone like Adam is really like what you just said is perfect because the thing is, even if you don't know the exact solution, you're confident that you can find a solution. And I remember like they had that's a situation where they had their own person, their own lender, and they were basically just like, it's not going to work.
Hmm.
So luckily I was able to get them someone else. It worked out. This was like a couple of years ago, but it was like that's not what you hope for when something goes wrong. You want exactly what you said. You're like,
Hmm.
I've got you, just like we do. Like, I've got you. We're gonna figure this out. Like, let's make it work. And if it doesn't work, it's because we have exercised every single avenue, and we're gonna find a solution another way.
Exactly, exactly. And I think that is one of the benefits of having my financial background. Like just the thing that I liked the most about my career, which did lead to more like strategic leadership, but I really like the financial problem solving aspect. So that's what I do in mortgages. So I
Awesome.
do, yeah, I do say if there's a way to get it done, I will find it. You know?
Love that. I love that.
Yeah.
That's so cool.
Yeah.
Um, okay, so I know everyone's kind of it's been a crazy like so you got into what was the actual year? 2022?
Yeah. I was licensed 2022, into it full time 2023. Yeah.
So that was a roller coaster, I'm sure.
Yeah,
Tell
yeah, the
us about
bottom of the roller coaster.
that.
Yeah,
It went
yeah.
from like I think what like at one point mortgages were like under or like I don't know. We did our property and our rental property for like super low, like
Hmm. I
1 point
still,
like
yeah, 1.8, did you say?
oh
Sorry.
yeah,
Yeah.
1.8 and 1.9.
I still see people with those rates that are coming up for renewal now. It's like, well, that's gonna double.
And that's the thing, right? So what was that like kind of learning? I mean, I very much believe that in a down market or a stressful time, that's when you learn the most and it really
Mhm.
equips you when things kind of get better, so to
Mhm.
speak. But what was that like?
Yeah, it was definitely challenging, especially since I was really just starting in that market after things were, because rates were, in the fives and 6% range at that time.
Yeah.
So that makes it really tough, and nobody's touching a 1.8 or 2.5% rate unless they really need to, right? People, and which made it tougher for, the real estate market as a whole, because people are going to try not to move if they might lose that rate, right? And keep those payments nice and low. So that was definitely challenging. It did take me a little bit to get going in my first, 6 months, but after I was into my first full year, yeah, I was really able to just find there's always people that are looking to buy and looking to do something. There were some people, I helped them stay in their home, whether that's through a refinance or switch them at the time where they were switching, they couldn't qualify for what they had, and so helping people out that way. But it was also a time where prices came down, so it's still, I think, a pretty good time for first-time home buyers to get into it. So that's a group that I do like working with still to this day.
Good. Yeah. And I mean, I think the thing is like I very much follow Buffini and Company is the company I love. Like that my coach is with them. Brian Buffini really takes his time to analyze the market. He gets advice from all the right people. And we're seeing things kind of like picking up for the spring. But I do feel that we get a lot of like the media likes bad news, right? So we get a
Yeah.
lot of negative kind of people saying, "Oh, everything's going to crash. It's terrible." And we have a lot of agents from like the GTA where things have really significantly decreased, kind of bringing that here, saying, because in London, it's actually a mixed market right now. Like we're still
Hmm.
seeing a lot of movement. Um, do you find that in your industry, you have people that are kind of like the doomsayers as well?
Yeah, definitely. Definitely. There's still, I totally agree. I think a lot of people do like the negative news, unfortunately, and I try to be more positive, but also realistic about things. So definitely, I hear the same thing, and who knows where it's going to go. And unfortunately, that causes a lot of, especially first-time home buyers, to be very hesitant
Yeah.
about getting in the market. I like to say, time in the market is better than timing the market. And
Oh, there's
yeah,
a sound bite. I like
yeah,
it.
yeah. I forget where I got that from, but it's a good one because it's really at the end of the day, like I said at the beginning. My wife and I got into the real estate market 20 years ago. We have a bunch of equity in real estate, and it's because we started young. And to be honest, this is another, message to those first-time home buyers out there
Yeah.
listening. The place that we bought at the time, it was 113,000. I actually just looked it up. The listing, it was listed recently. It terminated the beginning of August. It was listed
Yeah.
for 329 and probably didn't sell because the price might have been too high because just little 850 square foot semi-detached, every square inch
Yeah.
finished, side split. When I'm working with first-time home buyers, I don't see many. Actually, I've got one right now who's looking for something like that. I'm like, that's amazing. I love to see just get in the market. You don't have to start with, four bedroom, three baths, you
Well,
know.
that's in COVID, right? Like, and it's, I think, and I hearts to HGTV because we all love watching it. But I feel like when people are like, oh, let's look at these houses, like granite. And like my first house, I think we had to borrow furniture for the dining room from a friend's parents' cottage because we put everything into the down payment. Right. So
Yeah,
there's kind of there's something to be said about building up to that house.
definitely.
My husband bought his first house. Good for you, by the way, at 21. I think he was around the same age, about like 20, and
Heck
he
yeah.
bought his house downtown. I want to say Mile Street, for like $99,000.
Right.
And like that's a like, I mean, prices like that really aren't a thing right now. But that's the thing, right? It's building up and it's taking the time and sacrificing and maybe a few less Amazon purchases and a few less Uber Eats purchases,
That's right.
and saving up.
That's right. And that's where, like, I do love those first time home buyers and show them how much equity they can build. I put something together where I show them how much equity they can build over the first 5 years of their mortgage. And
That's awesome.
yeah, and it really does make a big difference to help show them that they can, oh, they can turn that $25,000 down payment into, potentially $190,000 in the first 5 years of their mortgage.
Yeah,
And so that gets them excited. But also if they start a little bit lower than that, then that's great too. Because, in 10 years, they're not going to regret buying right now. That's what
for
I'll be
sure.
able to tell them.
And I think there's a cool chart, and I can't remember the numbers exactly, but if you look at the net worth, the average net worth of a renter versus a homeowner, it's actually startling.
Hmm.
The renter net worth is so much less. And the thing is, like, you still, either way, you have to pay to live somewhere, right?
Exactly.
And it's, well, usually I think we have a whole generation of kids just like cruising in their parents' basement right now. But other
Right?
than those people, you have to pay to live somewhere.
Mhm.
Um, and it is expensive, but if you are going to go and pay rent,
Mhm.
why not figure out paying a mortgage, right?
Right.
Um,
Yeah. Sorry, I was just
you
on
go.
that point. Yeah, I was just gonna say too. The other thing with that is, yes, house prices are up. Like I do a lot of references to 20 years ago, and I see some graphs about that, like the early 2000s. House prices are up, over 4 times what they were back
Yeah,
then, whereas wages are, closer to double kind of thing. So it's definitely the cost of living has increased, but it's still attainable, especially for a couple. Single person, it is tougher to get in.
yeah,
Help from parents is a very common one.
yes,
But that's where, yeah, I just urge people to try to get in because then the other thing is we've seen rents increase, which they've kind of plateaued more recently, but rents increase, and if you're renting, your rent will always increase, right? So sometimes you can have
yeah,
that bit of that rent control, but it'll always increase. Whereas a mortgage, it's likely going to stay the same, possibly go
yeah,
down if rates go down, right?
yeah. You also don't have a lot of control. Like I have a lot of people who have been renting and then the owner has to sell.
Yeah,
All of
yeah.
a sudden, unless the people that buy it are okay with you staying, now you have to move and you didn't choose that. So I think just having that peace of mind too,
Mhm.
and knowing that your first house, and I think it's good that you work with first time buyers. We work with a lot of first time buyers too. Your first house doesn't have to be the forever house, right?
Right.
Like building. And so you might sacrifice, right? Like I try to have this chat with some first time buyers earlier this year. Like you might sacrifice that, like, yeah, the gorgeous house that you want, that you've been dreaming of, it just might be a longer dream.
Exactly. Yeah. Yeah, and I think it's good to just to have that and plant that seed because yeah, you're not gonna you have the people who have their parents live in that $1 million home, right? And that's what they expect their first home to be. And it's like it's not for most of us, so it's okay
That's
to start.
Yeah, well, and if you can do that, okay, go for it. But yeah, for the average person, one of the best sound bites from Buffini that I love with buyers is that it's not a process of selection, like when you know the house you want, but it's a process of elimination. So, what do you want based on what's available?
Hmm.
And knowing that like there's going to be things that are deal breakers, and then there's things that you might just live with for now.
Right. Right.
Okay, so I have another question for you. Um, so when I think you've alluded to a little bit, but for this career, you've been in 3 years now. What do you love most about it?
Yeah, I did allude to it a little bit. I really do love helping people get into homes
Yeah,
and stay in their homes because I have had some of those where I had to help somebody out of a tricky situation where they were thinking they'd have to sell and not because they really didn't want to. So I was able to help them stay in it. But
good.
getting people into homes, like I said, love working with first-time home buyers and those are the ones where it does feel just a little bit more special, because it's them starting.
Yeah,
I've had quite a few newer Canadians who have helped get homes and just, let them plant roots and get their, start building wealth, start, have a home that they can call their own, that kind of thing. Yeah, I love that. And a lot of them are really, really appreciative, really good to work with, and yeah, ask more questions, but happy to answer them.
Amazing. Yes, for that's fantastic. For newer Canadians, so if I have this correct, so permanent residents and Canadian citizens can purchase.
Correct.
What about if you're not a permanent resident yet?
Not in Ontario.
Okay.
So if you're on a work permit and you got at
Yeah.
least 6 months left, you can buy in certain places in Canada, certain provinces. Unfortunately, not in Ontario. You do have to have that permanent resident or citizen for everybody that's on title on that property. Yeah,
Right. Good to know. And then, I mean, if you guys do have more questions about that, Adam is happy to answer them and we'll give his info at the end.
absolutely.
Okay, so we talked about what you love. What are
Mhm.
the biggest challenges you're seeing in this career right now?
Yeah, I am seeing a lot of regulatory updates. It's been knock on wood a bit, which is like months since some new compliance and things have come in. So even in my, the short 3 years in this, there's been quite a few regulatory updates, which just makes it, more paperwork, more things to go through, more boxes to check, more, that kind of thing. So that's a challenge. And the other thing that I'd say is we are seeing a lot of especially the big banks be very competitive in this market. It's been
Okay.
slower the last couple of years, so they're really looking to hold on to their business. It's funny. It was kind of like a half joking expression when I was in 2023. Everybody was saying, all the mortgage folks were saying, "Stay alive to 2025," because all these renewals were coming up. But now the banks are working so hard to keep those clients where they are. And so it is getting competitive out there for sure. But yeah, on that note, I do always recommend getting a second opinion if you've
Yeah.
got somebody up for renewal, if you're up for renewal yourself,
Yeah.
because it's just such a mixed bag. I see sometimes the lenders be really competitive, sometimes they're not, and nobody. Again, one of I'd say my strengths is just having that financial background, giving that financial advice. Nobody at renewal is going to ask you questions about what has changed in your life in the last 5 years.
Yeah.
Do you have any debt? Do you have plans for renovations? Are you looking to move in the near future? All of those kind of questions that it's important to ask. And so that's where I'd say always get a second opinion and get somebody who can ask you those questions to make sure you're not just checking the box
Yeah.
and one, making sure you get the right rate and product and term and everything that you're looking for, but also, maybe there's some other life circumstances where you should
For
make a
sure.
change of some kind.
For sure. I mean, even with renovations, like things can be really expensive. So if there's a way, I know a lot of clients will actually do a refinance when they're renewing so that
Hmm.
they can update like the roof or update a bathroom or the kitchen or whatever it is that's going to add the value. Now when people are, so this might be a really relevant question. So if someone's rate like doubles or more, um, what does that look like for their payments? Will it always double?
Yeah, great question. And I get this a lot. This is like a lot of people are worried about this. And the short answer is no. Like if your rate doubles, your payments are not going to double.
Okay.
They will go up. Yeah, that's good. Potentially, 30 to 40%,
Okay.
if the rate's doubling. But that's where let's look at the situation and see. And that's a really good question too, because you mentioned the refinancing. If somebody's up for renewal and their payments are going up 30, 40%, but that puts them in an uncomfortable spot. Their incomes haven't increased nearly that
Yeah.
much, that kind of thing. They've got options. So let's have a conversation and see how we can re-extend that or what else we can do to make sure that you're comfortable with what
For
you're paying.
And no, and I think a lot of people worry about that because you hear things are going up and everyone's obviously concerned. Well, if it goes up, I can't afford it. So this is good. It's being handled.
Yeah.
Okay.
Yeah. People usually have options, so definitely
Good.
happy to go through that with them. Yeah.
Amazing. Okay. So as far as like looking forward, do you see any trends coming up in the last quarter, last kind of 120 days of 2025?
Yeah. So I think one thing that is happening is we do have a lot of these the big six banks in Canada have their fiscal year ends October 31st. And so they all tend to, especially the last couple of years, tend to try to grab some more market share. And so, the banks that I work with too are just getting more competitive, have some really good promos out there to save people money. So it would be, if you're up for renewal, if you're thinking about a refinance, that
Yeah.
kind of thing, now is a good time to look at that. Yeah, yeah, because there
I'm
are
happy
some
to help you.
yeah, yeah, amazing. Thank you. So there are some definitely some rate specials and things out there right now that can help yeah, just get you into a good product right now because we have seen fixed rates. People aren't really talking about it. Everybody's just, looking at the Bank of Canada announcements,
Yeah.
expecting rates to go down. And it's been holding steady for a bit. We are still expecting variable rates to come down in the next the remainder of 2025 a little bit. But also, I follow again, the major economists at those big six banks. So I got to take a drink of water here.
Yeah, absolutely.
Uh, um, and uh, and some of them are expecting the rates to just hold until 2026 or possibly beyond and not
Okay.
continue to see rate drops. And the other thing that people aren't talking about is fixed rates have actually, they were coming down and they've bounced up in the summer, like in the late spring, summer.
Okay.
So they are a little bit higher outside of some of these rate specials from some of the lenders. And so it's not going to be a straight line down. Like if I hear a lot, people still think we're going to go back to that two low 3% rates that
Yes,
we saw
yeah.
for a decade before COVID. I wouldn't hold my breath. We're closer to 4%, give or take, some under, some over. But I wouldn't hold my breath expecting rates to come down. So I think we're at the historical average. We might even be squeezing under them a little bit, but it's not going to be, if people are just waiting till whenever to try to take advantage of lower rates in the future,
Yeah.
wouldn't hold my breath.
And what would you say, so if I know like so I guess this year and next year there will be a lot of renewals because this is kind of
Mhm.
like when all those people if they've waited the whole time, that's when that's happening. How close, so I think the earliest you can start to do a renewal is 6 months before. Is that everywhere?
It depends.
It depends. Okay, I look great answer.
Yeah. I think that's a good time to start talking to somebody, talk to your current lender. I
Yeah.
do always recommend clients talk to their current lender first,
Yeah.
because sometimes again they're being very competitive. If that person doesn't need anything new, again, I'm an open and honest person. So if
Yeah.
it's like, yeah, you just want to keep going and they're giving you some screaming rate, then fantastic, renew and carry on. But otherwise, that's a good time to look at things because then you have options. And typically, some lenders are different. Some you can renew within that first 6 months or 4 months before, and you
Yeah.
can, depending on obviously everybody who's in that 1.8% rates looking to wait as long as possible, but
Yeah.
it's still good to start that process about 6 months in advance.
So if you're trying to keep that low rate, when is it almost like when's the very like the shortest window between you doing something and your expiry of that rate? So would you say a month, 3 weeks, 2 weeks? What's the kind of the where you need to get your ducks in a row?
Yeah.
You can't wait any longer.
Yeah, so typically, like if you're looking to switch lenders, I'd give it a month. It
Okay.
can be done within that, 2, 3 weeks is absolute minimum,
Okay.
but I would say a month or else there's no guarantee it's going to get done on time. And the
Okay.
other thing I say, because, I do get this question a lot, and I do have people come to me about a month in advance. It's always better to start sooner. Because the other thing is, what would happen is somebody comes to me 6 months in advance, we go through the process, get their documents and everything. I can
Yeah.
actually submit that 4 months before their renewal, but we
Okay.
just set it for the renewal date. And
Yeah.
then they get that locked in rate, whatever it's at currently. And then I actually watch rates. So if they go down up to a week before closing, they get the best rate,
That's
but
helpful.
they're changing at renewal date. They don't have to worry about managing that. I'll manage that for them.
So I understand, so everyone can understand. So
Yeah.
if you go 4 months early
Hmm.
and you lock into something that's like double or more your rate, you're not then changing to those payments until the date.
Correct.
Okay, so
Correct.
that's
If
helpful. So
that's
like
that's
there's
how I
no
would
downside
structure
to
it.
going
Yeah.
early. Okay, that's how Adam would structure it. Call Adam.
That's right. That's right. That's right. So really that mortgage switch, it's called, would
Okay.
happen at your renewal date. And that's when the new mortgage comes in, your
Right.
old mortgage goes out, but it would be set up to go on that date.
Okay. Awesome. Okay, so I guess um the other question I have, so if people are, so I know purchase plus improvements, I was just told from another mortgage colleague that purchase plus improvements has expanded a little bit to include some more like a secondary rental unit.
Hmm.
Do you recommend that people, like if they're looking to grow and invest, do you recommend people try and like build onto their own properties, or do you still think buying another property is a better idea?
Hmm. That's a really good question because there are a lot of changes and a lot of new programs and features for things like additional dwelling units and things like that.
Yes, sorry, additional, not secondary, additional.
Yeah, yeah. So additional dwelling units, and there are some where you can do, say, purchase plus improvements and add a basement suite to,
Okay.
finish a basement, put in a separate rental unit, and get all of those costs added to your mortgage. So that is a good way to go.
That's
Ooh,
just
I
on a
think
new purchase, not a refinance, right?
correct. Purchase
Yeah.
plus is only on a new purchase because if you're going to refinance, you can refinance to take out the equity to do that. You
Yeah.
just need to have at least 20% equity in the property to
Yes.
be able to take out any money.
Yeah.
Yeah.
I mean, I think that's good because I mean, if anyone's seen the movie The Big Short, we like that we have that buffer in Canada, so that I'm assuming they have it there too, now too, but um,
Yeah.
it is good to
There,
make sure.
Yeah, and I will say CMHC did come out with that additional dwelling unit program where you can actually refinance up to 95% through the CMHC insured program. So then you're putting that mortgage insurance fee and everything in your mortgage again, but
Okay.
it can make sense if it really helps you get a renter in your basement, let's say, and this is where it comes down to, municipalities, different guidelines and things like that. Because you
Yeah.
could put an additional dwelling unit on your property potentially, depending on where you are, like a totally separate dwelling space
If you have a
and rent
larger
that out.
lot, yeah. So that's that. I
Yeah.
think that's the thing. So Mina Nguyen, who is on my team, and we were
Hmm.
together. She does a lot of investment stuff. So she loves call it she calls it house hacking,
Yeah.
and she's very passionate about it. So I try to learn from her passion there. But yeah. So if it has like a big lot, and you don't really know what to do with it,
Mhm.
sometimes that's an option.
Yeah. And it could be a great way to add some serious value to your
That's
property and get
yeah.
some rental income. Yeah.
Yeah, absolutely. And I think there's enough people, as much as we're all trying to save, people are trying to save for property. There's still a lot of renters out there
Hmm.
that we haven't turned them yet into owners.
That's
Yeah,
right. That's right. Lots of people still looking for a place to live, no
yep,
matter what. Yeah.
exactly, exactly.
Sure.
Okay, so if people have questions for you, what's the best place to reach out? So you have your email, phone, and
Hmm.
social media. What would you prefer?
Um,
Call.
email's good. Yeah,
Okay.
call, and I'm happy to take a phone call anytime.
Okay,
Yeah.
so we have Adam at Legg Mortgages. So Adam at Legg Mortgages with an S.com. And the phone number is 519-777-3194. This will all be in the comments below. And on social media, what's your Instagram handle?
Ooh, I think it's Adam Legg Mortgages. Adam
I always
Legg
have to check
underscore
mine.
mortgages. Yeah, I
If you look
am.
up Adam Legg and then
Yeah,
click the one that says mortgages.
exactly, exactly. You'll find me there. Yeah,
I'm always like, I think my browser thinks that I'm obsessed with myself because I'm always like, I don't know what it is. And I just always go up and I'm like, just copy and paste and send.
right. Yeah, that's
Um,
awesome.
but okay, amazing. Adam, thank you so much. Is there anything else that you wanted to share before we wrap up?
Yeah, you know what? I'll share a couple things because one other really good strategy, which could apply to anybody potentially, even realtors, because I heard you, going through your database, following up with people.
Yeah,
One thing that might be good to ask is there's a lot of clients who bought in 2023 and 2024 where the rates were a little bit higher.
yeah.
I'm talking to a lot of my clients who bought in that time frame about possibly switching
Oh,
and
okay.
saving based on these lower interest rate promos that are going on right now.
Oh,
And so they may have an opportunity to save some money. So possibly break a mortgage, save some money, and whether that's a refinance or a switch.
yeah.
And that's where I can go through it. But I am seeing like, for example, one of the good ones I've seen is penalty of about $8,000, but they were able to save about 22,000. So they're net saving
That's a good
14
trade.
over the remaining 3 years of their term. So
Yeah,
some crazy savings, and it's a good opportunity right now. So I'd be happy to, yeah, I'd say reach out to your mortgage broker. Banks aren't going to do this. They're not going to look to switch you somewhere else. So keep that in mind. And even for realtors, if you're talking to people in your database, it could be just a value add to get a free mortgage assessment and
yeah.
just to see. Yeah.
Yeah, no, that's amazing. So, any realtors listening, reach out to Adam and he can help connect you with the wording for that. And yeah, I think that's a great way, especially as we're going into the fall. Everyone wants to know because it gets busier in our
Hmm.
in our part of the province. Um, but there's always like we're always looking for a reason to call, a reason to message. So that's a great reason to say, hey,
Yeah.
go through and look at everyone that bought in 2023 and 2024.
Hmm. And
That's
who knows?
fantastic.
Maybe somebody's looking to sell and buy again, right? You never know.
Guys,
Yeah.
it's all happening. It's
That's
good. It's
right.
good.
That's right. Yeah.
Oh, thank you so much, Adam. This has been amazing.
Yeah.
And anything else before we wrap?
No, I just want to say thank you, Crystal. Thanks so much for having me on. It has been great. I'm really yeah, grateful that you reached out and had me on.
Amazing. Well, thank you so much. And everyone, if you do have questions, please reach out to Adam. He is so happy to chat with you. If you're interested in being a guest on the show, just reach out to me. And again, I'm Crystal Lemur Lucier, also known as your Home Sweet Home 519 Realtor. This is Realtor Life. Thanks for listening. Yes, thank you. Bye, guys.
Bye.